Welcome to Green Money Matters, the podcast where your financial future meets the planet's well-being, bringing you the latest on climate issues and uncovering new and exciting investment opportunities that make a positive impact.
And I'm Chris Everett, your guide to sustainable investing, ESG funds, and all things green. Each week, we'll explore the intersection of money and sustainability, showing you how investing wisely can create a greener world and grow your money.
So get ready to invest with a conscience and join the growing movement of individuals who are reshaping the financial landscape. Welcome to Green Money Matters.
Leslie Samuelrich has led the Green Century Fund since 2012 and is one of Barron's 100 most influential women in finance for 2023 for the second year running. Has more than 25 years' experience in corporate engagement and environmental and public health advocacy. And her comments have appeared in the Wall Street Journal, Bloomberg, Reuters, Barron's, Morningstar, the New York Times, and many others. She's a former two-term board member for the Forum for Sustainable and Responsible Investment and is on the advisory board of ESG Clarity. She's a guest lecturer on impact investing at the Wharton School. Leslie, welcome.
Thank you, Chris.
So I'm really, really pleased to have you on the show. We've chatted before and had a lot of fun. But for the benefit of our listeners, please tell me a little bit about yourself and Green Century Funds and how you came to be such a force in impact investing.
Well, Green Century Funds are different than other U.S. mutual funds in its origin and structure. So we're created and we're owned by a set of nonprofit environmental and public health organizations here in the U.S. And that really informs and shapes our mission. What we do is offer fossil fuel-free mutual funds to investors. We also run an award-winning shareholder advocacy program in which we work with companies to change their environmental practices. And then 100% of our profits belong to our nonprofit owners. So that is the third way that investors can make a difference with us. I've been here 10 years and I'm the president, and it's been a great time to be in this field as it's been changing and emerging, and others have been catching up with the idea of responsible investing.
So what sort of changes have you seen in impact investing environment over the last 10, 20, 30 years?
Enormous changes. When Green Century first started in the early 90s, in the US, there were just a handful of firms that were pursuing either social or environmentally responsible investing. Green Century was one of them. Our focus is on the environment principally. But all of them were collecting assets and growing over time, both from individual investors and institutional investors. But really, in the last 10 years, there's been an explosion in the field here in the US, both with the fossil fuel-free investing movement and under the broad banner of ESG, or investing with environmental, social, and governance data, or sustainable investing, as it's more known as maybe. The bigger firms have launched products to try to capitalize on this wave of interest. And so you've seen a flood of new offerings come in and pick up a lot of assets, but also in some ways confuse people. They've used a lot of terms that people are misinterpreting as meaning something that they may not mean. And then subsequently, now with the attack on ESG here in the US, you've seen also those firms pull back on their marketing and claims. I think it's a whole different scene in Europe, which your listeners may be more familiar with, that sustainable investing has just been steadily growing and growing to the part where there's now more legislation, regulation, reporting, and classification of funds. But it has not come under attack there in the way it has here in the US. And so in Europe and in Japan and other places, it just kind of keeps steadily growing with both individuals and country pension funds jumping on this and offering a whole wide array of options.
Yeah, what sort of kickback have you been getting in the US?
We have not been getting much kickback in terms of this attack because for our investors, they have been probably really pretty clear on what we do and what we don't do. And since we have such a long track record and are very forthcoming about what we offer and how we structure our funds, we haven't seen the outflows that others have. But with the attack on it, a lot of it comes from the fossil fuel industry, as has been recorded and documented, that the Green Century funds are on some of the boycott lists from state pensions, including that in Texas. And Texas pensioners are not allowed to use Green Century as one of their options. But Green Century was never actually available to Texas pension funds, so there's no loss of assets for us there. I'd also note that we have been spending a lot of time trying to clarify what quote unquote ESG investing is. And we have been working with financial advisors and retail investors to clarify that there's real differences between using environmental, social, and governance data or criteria in making investments that might reduce material risk and enhance performance, and screening and shareholder engagement or advocacy. They're really different approaches, and clarifying that lumping them all together is doing a disservice to all the different options that are out there.
What do you mean by that exactly, though?
What I mean is that using this ESG data really is about reducing risk. People are using it as a factor in making decisions about which companies to hold in their funds or portfolios. But using ESG criteria or data does not mean that those companies are actually contributing to environmental, social, or governance outcomes in the real world. And that has been a big misconception that we have been talking about and writing about and trying to help people understand the differences in approaches. And by that, I also mean that, for example, if a company, say it's a textile company, one of the key factors you would look at on environmental risk is their use of water. And a company can manage its water risk either by conserving water, installing new technologies, or changing their processes, or in some cases, by buying up water rights from local communities so that they have access to water. ESG data tends to be ecumenical and indifferent to how you manage your water risk. But most people would think that if a company is managing its water risk, it means it's conserving water. And so to try to really differentiate how those two things play out has been really important and part of our work to expose misleading or even greenwashing attempts by some others in the field.
But that's brilliant. And how do you communicate or share those findings with your investors, with your customers?
How we share those findings is we and I speak often at conferences, and this is one of the topics we talk about. And we've been writing articles and speaking to the press about it, and also just communicating through our investors, through our email and website, as well as the meetings we have, really trying to parse out these differences so that people are just more informed and they can make their decisions accordingly.
Fantastic. Tell me about your work as a shareholder advocate. How do you influence or indeed perhaps put pressure on companies to do the right thing?
Part of our mission at Green Century is to really help companies and our investors make a difference in the real world, as well as to manage their risk. So we use the full array of shareholder engagement and advocacy tools available to us here in the US, as well as doing some advocacy globally. And what we always do first is ask a company to make and address the change that we're seeking to manage. If they're not willing to do that or not willing to do it on a timeline or put it in writing, which is an important part of holding them accountable and letting other investors know how they're managing their risk, we file something called a shareholder resolution. And that is a question that will appear on the annual ballot and will go forward to shareholders to be able to vote on it. And so we will go through the whole process of filing the resolution, defending the resolution, and the question goes to the ballot, then spending time educating other investors about the question and encouraging them to vote in favor of the resolution. So for us, Shareholder engagement is much more than voting our proxies, which we do using environmental criteria, and much more than asking a company just to report to us on their risks, but really taking the next step to get a company to change their policies and practices. And so we spend a lot of time negotiating with companies. In this current year, for example, we're working with about 60 to 70 companies through our shareholder advocacy team. We filed over 40 resolutions. And right now we're in the middle of shareholder advocacy or shareholder meeting season. And we're either seeing companies come to the negotiating table where we hammer out an agreement with them, and then we'll withdraw the question from the ballot, or we're going to a vote. And so we are then making our case at the shareholder meetings and working for a strong vote, ideally a majority vote, and then using those results to further leverage our power and get companies back to the negotiating table and issue policies that address that risk and make some real world change for our investors and everyone else.
It sounds like an awful lot of work. Can you share with us some examples of where your advocacy has actually had a real world concrete impact on a company's policy?
Absolutely. This year, for example, we've been working on protecting ocean wildlife and ourselves from plastic pollution. And so we focused on hotel chains and toy companies. Toy companies are one of the most plastic intensive industries in their sector. And so we saw a lot of risk as well as a lot of opportunity. And so just recently, we issued a press release about how we worked with Disney, which not only has theme parks and amusements and restaurants, but also makes a lot of toys and other products. And we worked with Disney to first get them to measure their plastic pollution and then come up with a plan to reduce their plastic use. We've also secured agreements with Mattel and Hasbro in that same industry so that really we're trying to lift up all of the most plastic intensive companies in our portfolio to address this. One of the companies, Costco, not a toy company, but makes a lot of its own products under a signature brand. And in a relatively short engagement, less than a year, we've also gotten them to agree to reduce their plastic use over time in their signature brands.
That's an interesting one. I mean, toys are obviously a very emotive subject, and with so many of them using or deploying plastic in production, did you hit any walls or PR issues around that?
I would say we always hit a wall. The question is how we get over or get through that wall. If we didn't hit some of those walls, there'd be no need for us to do this engagement work because companies would just be assessing these risks and making these changes on their own. It all comes down to our team and how we're working with the company and how we're able to present the risk to them. And then, sometimes it's a gentle nudging to the negotiating table and to an agreement. And sometimes it does take really flexing our shareholder muscle to get them there. And so that's when, if we can't reach an agreement in the early stages of negotiating with them, we do have to go to the ballot. And companies generally do not like resolutions to appear on their ballot. They want, if I can speak broadly, they really want the questions on their proxy ballot to just be about the governance issues that they're putting forward so that investors can just address those issues and they can move on from there. They don't want outside shareholders to put any question that sort of detracts from their ballot and raises questions for the company about what's happening with that issue. So in some of these cases, we did file a resolution, for example, with Costco, but we were able to successfully withdraw it when they realized we wanted to reach an agreement without going to the ballot. That is actually easier for everyone, but that we would be serious enough to go forward to the ballot if that was the case.
Okay, brilliant. Understood. Now, I mean, fossil fuel divestment has been increasing slowly over the last few years, but yourself and Green Century Funds have been big advocates of this for quite a long time. Please share with us, how you got into that, the successes you've had with fossil fuel divestment.
Sure. When I joined Green Century about 11 years ago, we still were investing in gas companies. And I think that's because a lot of the world at the beginning really thought about gas as a bridge fuel to a clean energy economy. And as fracking continued and the environmental and public health risks became more obvious, that's when we and others felt very uncomfortable with those holdings. So at first, we spent many years working with the gas companies in our portfolio to try to get them to change their practices, whether it was capping their methane wells so that the methane gases weren't escaping, or lining their water pits so that the toxic chemicals in the water they used to do fracking wasn't leaking into the underground water supplies. But what we found was that companies were not willing to do all of the things that we thought were important and would make fracking more safe. But at the end of the day, fracking is just not a safe endeavor for our environment and people around those facilities. So we changed our funds, which never had coal or major oil, but we changed them to eliminate all fossil fuels. And so back in 2014, and moving forward, so now 10 years into this, we don't invest in companies that explore, extract, refine, process, or transmit coal, oil, or gas. And I thought that when we did this, that other firms in the socially and environmentally responsible field would follow us very, very quickly, that they would also understand that this was a risk and this is what people were really wanting to do. But surprisingly, they did not. And so for many years, Green Century was one of the only US based firms that was fossil fuel free. And so we always been one of the first. And so I think a lot of investors were attracted to us for that reason then and there. And and I particularly spent a lot of time actually debating this issue with others in the field. And it was highly contentious because there was a cadre of long-term investors who really still believe that engagement with those companies would make a difference. And we saw that progress was, slow at best. So at that point, we thought that it was just better to spend our time elsewhere and to offer investments to people so they could align their environmental values with their investments. So for us, it has been a game changer just in terms of being able to be very clear about what is environmentally responsible investing to us and very clear to our investors and prospective investors about where we stand on this. And consequently, we've been able to spend all the time that we could have been spending working with fossil fuel companies and sort of, beating our head against the wall to working with dozens of other companies every single year and achieving some of the agreements we have on climate change, on forest and nature risk protections, on plastics, and even on things like right to repair so people can repair their devices.
That's really good to hear. So, I mean, that's a really good answer to the question of, should we engage with the bad guys? Rather spend. And the answer is not. Spend your time and energies with the good guys and launch those rather.
I completely agree. If you want to have a responsible investing product, I don't think, in our opinion, investing in the industry that drove climate change is that responsible. And so, unfortunately, even though shareholders have been trying, what they have found is that they have not made much difference in the role that fossil fuel companies have played in the climate crisis. And people are always going, well, then we'll have a seat at the table. And my analogy is, yeah, you have a seat at the kids' table, which is in the other room, which is getting, mac and cheese, where everyone else is eating, a much nicer meal. So your table doesn't have much influence or power over anything.
Great analogy. I love that. On the subject of contentious solutions to the environment. Where does Green Century Funds sit on nuclear fuels, atomic energy?
We don't believe that nuclear energy is safe for people or the environment. Even though there's been some technological advances in how nuclear energy plants can be built, there's still no solution to what you do with the nuclear waste. And so to me, it has been a very alarming change in the sustainable investing field that some firms have actually started to not screen it out and look at it as a solution. So, and I wrote something about this about a year ago, and wow, that was, well received by those who agreed with me, but it also got on some listserv about nuclear energy proponents. And I think it was probably one of the most widely attacked pieces that I've ever written. And it's really surprising to me that we are still looking at technological solutions to our climate problem where, nuclear energy, carbon capture, you know, technology alone is not going to solve our problem. It's very clear we need to reduce our carbon emissions across all industries to be able to mitigate climate change. It's no longer, we can't stop climate change. It's happening now, as our listeners probably very clearly understand by experiences in their own lives with erratic weather, wildfires, flooding so badly that here in the US there's some areas of the country where insurance companies are just not offering insurance to homeowners because of the risk of climate change. And so I think it's a complete diversion away from our climate problem, and that we just need to stick to the knitting and reduce our reliance on dirty fossil fuels and keep embracing clean energy. I mean, there's so many advances, and the price point has come down on these industries and availability, that's the way to go, not to turn back the clock, forget the nuclear accidents that devastated communities and countries, and move forward to the clean energy solutions that we all know about.
Yeah, and for the most part, we seem to have them there already, just not yet at scale, or scale enough perhaps. Where are you seeing the greatest growth areas in terms of your funds overall? Is it entirely in clean energy solutions? I'm most interested in which companies, which industries are you seeing greatest expansion in?
One of the companies we hold is NVIDIA, which is part of the huge growth industry. And so we have been happy with the performance of it. We're also really happy that we were able to get NVIDIA agree to a plan to cut its carbon emissions. In one of our funds, the Green Century Balance Fund, we also have been focused on growing the green and sustainable bond part of the fund. So in our fixed income portion, we have over 70% of the fixed income holdings are now green and renewable bonds. And so those directly address climate, water conservation, clean energy. We evaluate them by use of proceeds. And it's been a huge growth area for us, but as well as for the rest of the field. There, there are more green bonds available, corporates, supranationals, and municipal green bonds, which is a great, great advance. And people have been very eager to pick those up in the portfolios. And our fixed income part has been able to offer and be a ballast to the equity performance and deliver a lot of real world changes as well. We have been investing in solar plants in Latin America, as well as a few years ago, we held a bond that helped retrofit the Mexico City bus system, which made it more efficient by raising the platforms up so people could just enter it like a subway or a metro or the tube, and then also just reduce the amount of pollution.
Those are great examples. So your fixed income solutions, your bonds, is Green Century acquiring those from others, or are you putting those bonds together yourself?
In the Green Century Balance Fund, our sub-advisor is Trillium Asset Management, and so we are purchasing them directly from the issuer. We've been an early subscriber to green bonds, and so a little bit we get the heads up, and it's easier for us to purchase the ones that we're most interested in. And we do focus on green and renewable bonds. We're not using sustainably linked bonds, which sound really good, but have a lot of loopholes in them. And we're not using transition bonds, meaning that we're not holding bonds from, say, a fossil fuel company that is issuing a small clean energy bond. That's just not, others could do that if they want, but that doesn't fit with our set of values.
Understood. For investors, what is it about Green Century Fund that really sort of sets you apart from other sustainable investing platforms?
I'd go back to the three ways that we make an impact. So,
Mm.
one, construction of the funds. We have a lot of environmental screens, such as excluding fossil fuel companies. We also exclude genetically modified organisms, or GMOs, as they're more commonly known. So, any producers of GMOs are not allowed into the fund. We also exclude nuclear energy, tobacco, military weapons, as well as gambling and alcohol pieces that have been long-standing screens on socially and environmentally responsible bonds. So one, it's that construction. We're also using ESG data to manage risk. And then as we just talked about, we are subscribing to a lot of green bonds in our balance fund. The second part is the way that we do shareholder engagement and advocacy. A lot more firms are talking about this. Sometimes they're referring to simply voting their proxies. We obviously, or we do vote our proxies in-house with our own guidelines, one by one. I approve almost all of our votes as president, but we go far beyond that to engage with companies and, if needed, really take the battle to the proxy ballot and secure the concrete changes that we need. Last year, we got 20 policies from really big companies like Lowe's, Home Depot, Costco, as we mentioned, as well as international companies like Bunge, which is one of the four big agricultural producers and has been a huge contributor to deforestation. And so we've been working with them to protect areas, particularly in Brazil, and that beyond the Amazon, which is an iconic and very important ecosystem, to another region called the Cerrado, which is more described as natural vegetation, but is really home to a lot of endangered species. And so those kind of stories and work, I think, help set us apart as a company that goes beyond proxy voting and just talking to a company, but really trying to punch above our weight in terms of size and secure those agreements that help our investors make a difference in the world, but also just make a difference, period, in the world. And then the third is our nonprofit ownership. We are not aware of any other fund in the US that was created and wholly owned by environmental and public health groups. And so instead of profits going to someone in Wall Street or a few venture capitalists that started something, it is going back to NGOs that are fighting here in the States. It's state state at the state level and at the federal level to secure more funding for clean energy, to conserve natural areas, whether it's public lands or forests, and to protect public health. For example, protecting the effectiveness of antibiotics by trying to reduce its use in factory farming. So those three things Green Century delivers in a way that helps set us apart from other options on the market.
Absolutely. No, I think that combination makes you highly unique. Very, very interesting. There's a couple of things you mentioned there that kind of prompts a question or two, really. And that is agriculture, animal farming specifically generates an enormous amount of carbon, either directly or indirectly. What is your policy or your take or your approach towards reducing animal agriculture exposure within your funds?
Well, in the balance fund, in the Green Century Balance Fund, we actually have a screen against factory farming in that fund. And in our other two funds, where there are companies that are involved in some aspect of it, we have been working very hard to get them to reduce the worst parts of factory farming, such as keeping pigs and pregnant sows in gestation crates where they can't even turn around usually
Mm.
for their whole pregnancy, as well as promoting alternatives to factory farming. So, on the first part, what we've done is work on cage free eggs, as well as pushing companies to source cage free eggs, as well as convincing companies to eliminate the use of gestation crates. And then I personally was a candidate for the McDonald's board of directors because McDonald's had made a pledge to phase out the use of gestation crates and then effectively change their change their commitment and reneged on it. And so in an unusual partnership, Carl Icahn asked me to be one of his candidates to run for the McDonald's board. And while I didn't successfully secure a seat on the board, it did help raise the issue and it prompted other companies who were afraid of a proxy fight to come to the table and either with us or the US Humane Society agree to a set of other policies around cage-free eggs and gestation crates on much faster timelines. The other thing that we've been doing to move away from factory farming is to encourage companies to offer more plant protein based options. And so many years ago, we filed the first shareholder resolution on plant based protein, or I should say, we filed one of the first resolutions on plant based protein with Tyson Foods. And it was around the same time, right after that, that Tyson took part of an ownership stake in Beyond Meat, which they held for several years until they developed their own products. And so we were committed to continuing to work on plant based protein, but at least here in the US, a lot of the companies that we were going to target started moving there already. And so we're really pleased that companies were taking this cue from consumers and the larger environmental consequences of factory farming. And we also have started to target the beef industry specifically around its role in destroying tropical rainforests, particularly in Latin America. And so we have been working with consumers of JBS to encourage the company to change the way it runs its cattle farms. That's going to be a longer battle, but unfortunately, cattle farms destroy a lot of tropical forests the way that they are managed now. And it's a huge contributor to climate change as well as the sort of animal welfare issues that we're talking about now. And so we are hopeful that as we successfully have worked on companies who source and sell palm oil and soy, that on this next frontier on beef, that will be able to help change the industry.
Excellent. It's very, very heartening that you're having that sort of impact and making that sort of progress. But I guess it's going to be perhaps a little while yet before, let's say, a vegan investor could come across something specifically for their needs.
I think it's challenging to find a portfolio that matches up with what some vegan investors might find acceptable. And so on that score, at least for us, we're not at the point yet of divesting from any company involved in factory farming. We are still finding that the engagement part is working. It's not working to change them into a different industry yet, but it is making and getting rid of some of the most egregious practices of factory farming. But essentially, factory farming is not environmentally sustainable practice. And so, what we hope is that by changing the practices and eliminating gestation crates, advocating for more cage-free eggs, advocating for more humane treatment of animals, that they actually have to change their business model and how they produce products and start investing in alternative proteins. Time will tell. if we're ultimately successful on that. And until then, people could choose to invest in firms like Green Century who are advocates on this, or they could choose to invest in other places or just own stocks in the companies that they like and wait for more progress.
No, understood. I think it's sometimes difficult as you increase the criteria upon which you're prepared to invest. Obviously, there's a decreasing amount of choice that's associated with that.
It's hard to be pure in public markets. So you can align your values to some great extent, but public markets are messy. There's no company that's perfect. We would fully acknowledge that. And so we're doing our best with the companies we hold, trying to hold companies thoughtfully, and then where they do have practice rub up against our environmental values and risks, really taking them to task for it and trying to get them to change those policies and practices. But as you mentioned, over time, sometimes that doesn't work. And so that's why we did add the screen against factory farming on the balance fund, because it just became clear that in that fund, we didn't want to hold any companies, and none of the companies met our criteria. So we officially added the screen a few years ago.
Excellent. So let's knock a couple of the typical or complaints about impact or sustainable investing off the table. Now we've got you here. So sustainable funds come with higher fees than traditional funds. Knock that one down for us, please, Leslie.
Sometimes they do. And sometimes you have to pay for what you want. I mean, we spend a lot of time and resources on our shareholder advocacy program. And so I think if you're looking for the very least expensive option in the market, that you may not go into a sustainable fund, however that's defined, and then that's your choice. But we have found that as we pursue competitive returns, that our investors are generally really happy with what they get from Green Century. So it's not only the value, the dividends, or the value of the investment, but also knowing that they are making an impact in this part. Too often, I think people and the media have thought about, well, to make a difference in the world, you make as much money as you can and then you donate it somewhere. But really, a lot of times people don't get around to the donating it part to the causes they care about. And there's no reason to have that firewall between your values and your investments. A lot of our investors do all the things that probably a lot of your listeners do. They recycle, they try to eat organic, they bike when they can, they use public transportation, they're putting in solar panels in their homes. They do all those things in their lives. And so I'm always encouraging people to think about, well, what could you do in your investments that also help make an impact? And so sometimes it comes with a little bit of a higher fee. And maybe you don't do that with all your money. Maybe you do it with part of your money and see how that feels and how that performs, and then decide how to move forward.
Exactly. I mean, obviously, depending on who the investor is and what stage they're at on their financial journey. But there's a lot of evidence to suggest that how you invest has one of the biggest, if not perhaps the biggest, impact on the environment, certainly compared to all the other things that we all try and do: cycle, shower for shorter periods of time, recycle, all those sorts of things. And then the last one to knock down is that impact investors have to sacrifice return. Deal with that for us, Leslie.
It's probably the biggest question that people have. People are trying to save for their future. There have been many studies that show that excluding or including certain industries over time doesn't have a substantial impact on your investments. And so I think there's a lot of myths out there about sustainable investing. And at least from our experience, excluding fossil fuels during some periods, we might lose out on some returns, but during many other periods, our funds can perform better than those that are investing in fossil fuels. So that it really helps to look over the long term. Most people are long term investors. We encourage people to be long term investors and not try to sort of play the market on that. But I would look at track records of funds, including Green Century funds, and look at what would have happened over a certain number of years and then decide. Don't just buy into the myth of this, or listen to your financial advisor, because if he or she is not familiar with products in this area, they might have a bias against it. They don't want to seem like they don't know something. And so they might be discouraging your readers from moving forward on that. We've heard countless stories of that happening here in the US where people, their financial professionals go, "Oh, you would lose money on that." And then the average investor is relying on their financial advisor to guide them and they go, "Oh, okay, well, I don't wanna lose money." And so then that's where the conversation stops. But during the launch of fossil fuel-free investing, this was a really, really common refrain coming from financial advisors and from investors who are turning to us and trying to ascertain what's true and what's not true. And so while I don't expect any investor to do hours and hours of research on their own, just look at the past performance and compare it against the other funds that you might be looking at. And if you don't have an advisor who is familiar with this kind of work, I would look for one that does, or invest some of your own money in the funds that you care about.
Yeah, absolutely. If your advisor isn't considering sustainable investments, then get another one. But in general, always challenge your financial advisor. No one's infallible. No one has access or insight into every fund on the market. But if you see something out there that interests you, then really get in there and ask some questions. And I agree, Leslie. The fossil
Right.
fuel industry is slowly dying. And the industries that are really showing huge expansion are those in the clean energy sector. So, yeah, heads up, everyone.
I think long-term clean energy is gonna be where investors will want to be. It's where the future is. It not only aligns with their values, but holds real promise. And the clean energy economy is not limited to just a solar company. There's companies that are involved in electrical grid distribution, wind power, just there's more to the clean energy economy than just a solar company. And so you can also look to the big names, but you also can look to other companies that are part of it, but aren't as iconic, and that they're all part of the solution.
Absolutely. So, what's next new and exciting for Green Century, Leslie?
Well, right now we're in the middle of shareholder season. And so what's exciting for us is to see what happens on this year's ballots and the final negotiations with companies. We are, as I mentioned, we're working on a lot of issues, including nature-based risks, and we're hoping for some wins at the ballot with companies and more announcements about agreements we've negotiated. And then we're also just looking at, and I can't talk about it in much detail, but also expanding into new funds. We've always aspired to be a larger family so that people, no matter what equity or investment class they wanted to pursue, that we had an option for them. So for us, the future's bright, and we are looking to expand and just reach out to more investors, both individual investors and financial advisors. For any people who are here in the US and listening to you, we're available through financial advisors at Schwab, Fidelity, all the major platforms, or just through our website at greencentury.com. So it's been an exciting year for us. And despite the so-called attacks on this industry on the ground, people are actually still interested in it. The attacks are not sticking in terms of people's experiences and what they want to do, especially with the new generation coming up. Younger people have just grown up in a different time, both just being used to being able to align their values in their lives, and being pretty scared about climate change. So while there were some stories, years ago about how this kind of investing is a quote unquote fad, we don't see any evidence of that. We're happy to keep doing what we're doing and just keep growing.
No, absolutely. The numbers are there. The people that declare themselves interested and engaged in sustainable investing and impact investing is just growing exponentially. And I'm thrilled by the generations coming through that are more and more strongly getting into it entirely. And I think it's brilliant that resources like you, Leslie, and like Green Century Funds, who are so strongly advocating for it and making such an impact on the market.
And Chris, I would add that whether you're able to invest in Green Century or not, depending on your location, that you can always go to our website and there are resources there for you just to learn more about responsible investing. In particular, we have a guide to fossil fuel-free investing that we co-published with Green America this year. It's our fifth guide, and it helps people just learn more about what that means, how to find investments, how to talk to your financial advisor about the options that are available to you. So I encourage people to do that. And if you're in the US and you just have questions about this or what any of the things I've talked about or you read about, you also can just give us a ring. We answer our own phones and talk to investors every day.
It's brilliant to hear that there are some real people at the other side there picking up phones still.
They're right in the Boston office, and we love talking to potential investors. I mean, for all of us at Green Century, this is really a work of, passion, and we can help people understand it and help them dispel some of the myths that they may have, learn more about options that are out there, and kind of cut through some of the noise.
Yeah. And I can underline as well the resources on your website, links to which we'll have in the show notes and on the website, are immensely useful and very readable. Leslie, thank you so much for all the work that you and Green Century does. Thank you for working so hard on all our behalfs. And thank you very much for sharing some of your wisdom and insights today. It's been a real education and a real pleasure. Thank you.
Chris, thanks so much for having me, and thanks to all your listeners for being interested in this topic.
And that wraps up another episode of Green Money Matters. We hope you're feeling inspired to take your investments to new green heights. Remember, it's not just about the bottom line anymore. By aligning your investments with sustainable values, you have the power to shape a better future for generations to come.
If you enjoyed today's episode, be sure to subscribe to Green Money Matters on your favorite podcast platform and never miss an opportunity to grow your wealth sustainably. Together, let's make money matter for the planet.
And don't forget to leave us a review. We really would love to hear your thoughts or ideas for future episodes. Drop me a line by email at chris@greenmoneymatters.com.
Stay tuned for our next exciting episode, where we'll explore groundbreaking investment opportunities and unveil the secrets of successful sustainable investors. Until then, remember, green money matters. Because investing in our planet's future is the smartest choice you can make. Thanks for joining us.